Hey, Stock Guardians! This is one of those special episodes again. I have one of our recent portfolio publishers joining me today, and you're going to be super excited. I'm very super excited, and you're going to be super surprised because she's a unicorn. She's a successful female investor, which we rarely get. So I've got a good treat for you. And as usual, we're going to get her to introduce her to you. And then she's going to tell us about one stock to buy now and why, one stock to avoid now and why. And we're going to get about her story and her past investing. So without further ado, Janee, welcome to the show. Please say hi to the Stock Guardians.
Hi, everybody. I'm Janee, and I go by Wealthy Nurse Janee on all of my socials.
Excellent. Well, the first time I saw your work and your social media, I was super surprised because not only you are a women investor, which is very rare, but also you are a nurse, so in medical industry. And I know medical, and my sister is a physician, and we always have a conversation about how people in medical industry or medical sector are basically very conservative about their money and how they go about investing. So you're basically bringing these two crashing these two barriers of women that invest and a medical expert and professional that also invest. So tell us about how you got started into investing. Why do you invest in the stock market, and just what makes you, why are you such a unicorn?
Well, I grew up in a middle income family. We did not invest, so I think that that's probably where a lot of nurses are coming from, families that don't really invest. They might have a 401k or something like that. Somebody else manages it for them. And that's where I came from too. I didn't know anything about investing until about 2 years ago. And I became a nurse practitioner. I started having a little extra money. Okay, it wasn't like, oh, I was budgeting for this. I should have been for a long time, but I did not. But now I had a little extra money. I thought, man, I should figure out what to do with this. And so what do? Get somebody like money manager. That's what my dad has, but it's always iffy. I don't know. They charge you a 1% fee. And then I look and I'm researching. I'm like, they don't even beat the stock market most of the time. And I'm like, why should I pay you a 1% fee when you don't beat the stock market? And so I'm okay, I have to learn. So I take an investing course. I start investing, and right away I start seeing it paying off, and so this is exciting, right? And so I'm learning more, and I'm learning more and learning more. And then now I want to start sharing it with everybody else and all of my other fellow nurses. I just want to help you all grow wealth and show you that investing isn't scary. It doesn't have to be complicated. You can make it as complicated as you want it to be, but it doesn't have to be complicated, and anybody can do it. And don't depend on somebody else to do it when they may not know what your goals are and the risk tolerance that you have. So that's the main thing that I learned, is that money managers help you figure out your risk tolerance. If you can figure that out, you can do all of the investing part by yourself.
Wow.
So yeah, that's kind of my mission now, is just to spread the word, tell people, hey, you can do it.
Do it. That's amazing. Just getting to that realization of, oh, this is something I can do, and understanding what is the difference between what you can do and what is a money manager would probably do for you. It's just such a journey, and it's not easy to get to that when it comes to money, to get to that realization. So I guess I kind of want to build on what you were just saying. How do you balance between being a full-time and nurse practitioner and have a job and have another sort of life, obviously, and then investing? by yourself, doing research and finding the companies or funds that you want to invest in, and also creating content and sharing it on social media. That's like each of them feels like full-time job. How do you go about it? Because there's a lot of stock guardians that are obviously this not investing is just what they do, part of their life, right? So tell us about how you manage your time and how you make sure everything goes right.
Yeah, so the part that takes the longest is when you first get started, and you're trying to figure out, where are my finances? If you haven't made a budget and you don't know where your retirement is, then that it takes a little while. You need to know, where is my money and what are my goals, and then once you figure out your goals, you figure out, do I need something for growth, or do I need dividends? Do I need income? And then you do your research on those things, right? So if you want growth, then you're going to go research the growth stocks. That's what's going to take the most time in the very beginning. But once you get that figured out and you're starting, it really only takes me like maybe 3 to 4 hours a month to do. Like, I don't spend that much time on the investing part, right? Use your resources like Stock Card. Okay. Make it easy for yourself. All right. Use your resources. Okay. Just like nurses. Okay. We have books, right? We have our medical resources. Use your resources for investing. These people are the experts, right? If you go get expert information, you don't have to go and do all of this research yourself. You don't have to pull out every single piece of information on a company. Other people have compiled that and put that in filtered information for you. So that's how you save yourself a lot of time. Okay. And so you do that. And then once you've picked out, I always say something like around 20 stocks to diversify. You pick out those 20 stocks that you're like, those are the ones I'm going to go with. And all you have to do is watch, like, is it on sale? Is it a good price? You can dollar cost average in if that's all you want to do, but constantly put a little money in to your investments, and then, so if you've got a little money, you just got to pick which one of the 20 do you want to put your money on this week. The social media is a different story. Now that I spend a lot of time on, I usually spend about an hour a day making content. Plus the time that I just spent on TikTok as research, yeah, I got to save the favorites, and these are the ones that I'm going to kind of copy. And so, that takes a little time, but sitting there videoing it, editing the videos, like, it's in about an hour a day. Now, a lot of people batch their content. I don't do that because it just doesn't work with my life. I can't dedicate a whole day, at one time. So just an hour a day, and I just kind of have thoughts in my head. This is what I'm going to do today. So that's pretty much how I do that. And then I work a full-time job, and I'm a mom.
Oh, wow. I did not know about that. So you have 4 jobs: being a mom, being a nurse, being an investor, and being a content creator. Wow.
Yeah.
Superwoman for sure.
No, anybody can do it. I believe it.
I agree. That's just, I think the way you broke it down in terms of investing part, which is most of what the stock guardians are all about, is that you don't have to every day research everything. And it's just about that narrowing the top of sort of the funnel from like the whole universe of everything that you can invest in into a smaller universe of like 20 stocks. And then it makes it a lot more manageable. It's like small bites, I guess, as you want to.
Right. And I think it also helps you, if you're saying, okay, these are the 20 I'm going to do, it helps you stay away from all of the hype and FOMO on other things, right? I mean, that's what people usually fall prey to, unfortunately. They're like, oh, I don't want to miss out on that. But if you just say, hey, these are the 20 that I focus on, that one's just not in my portfolio,
Well, how do you actually, that's a really, really good question. And I always ask that, but how do you deal with your emotion side of it? Because there's like a logical side, which is basically says, hey, that's not part of my watch list. this is what I can spend time, and I've already spent time, and I know these are the ones that I want to invest. But then there's all these like tempting distractions, right? Like just popping everywhere. And so how do you manage your emotions not to get distracted? Or how do you make sure of all the distractions you don't miss a few that might actually be good ones that should find their way into your watch list? What is your process of managing that aspect of it?
So here's the thing, that there's always opportunities, always, always, always opportunities. And if you miss one, that's okay. There will be another one, you know? And as long as you're doing what's best for your portfolio and for your goals, it's okay if you don't jump in with the thing that everybody else is jumping in on. And that's, I just have to tell myself that, you know, it's like a constant pep talk when you're like, oh, I should go check that out. And I always try to make myself like a to-do list. It's the same thing for, they say that if you, like, say you're trying to diet and you're like, I want this candy, if you tell yourself that you can have the candy later, you're less likely to have the candy ever than if you just say like, eat it now, right? Or say that you can't have it even, because if you say you can't have it, then you're probably going to eat it. But if you say I can have it later, so I'll make myself like a to-do list and just put that on. I'm just going to research that later. And then if I have time and I get around to it, then I'll research it. But I don't ever just jump in and buy it, you know, because I'm probably going to regret it. There's been a few times, honestly. I mean, we all kind of get susceptible to it.
I'll do it.
And all you just say, well, you know, I fell for it. Got me this time. I'm going to do better next time, and just go with it. You know, I mean, you can't punish yourself because of that. Like, for example, I have a group that I like of investors that I talk to. And so one of them just bought Nvidia, I think it was, that split. And she thought, oh, the price is going to go up. So she bought it, and then the price went down. And she was mad at herself because she didn't wait for the price to go down and to buy it. And I said, well, you know, long term, hold on to it. It's going to go back up. You know, that's a good stock. You like the stock. You thought it was a good investment. So no matter what the price is today, you're still going to win long term. So just hold on to it.
That's a fantastic example, because you could only do that with the stocks that you have conviction about it, right? If you've done your research, so I guess let me step back. I love the fact that you put it on the side and say, I will come back to it, because it gives you a chance to do your sort of due diligence, as they call it, do your research basically, and then form that conviction that this is the kind of a stock that you want to own. And then even if it goes down, because you've already done your work, you're not gonna, I mean, you're always gonna regret it. And like, it is like an emotional reaction. Like the red is always painful sort of when it comes to stock market. But you would go in, and if you go back to your logical way of thinking, and you're like, I have conviction, I know this is going to go up, so I understand this is a little bit painful, but I can buy in now more and it will go up. But if you do that with a stock that you haven't put on that list and you haven't spent time on it, when it goes down, there's nothing to back you up. There's nothing to give you that confidence that it's okay, I'm going to add more and it's going to come back, because you haven't done that research. The conviction is not there. And that's I found that that's where emotions get very difficult to handle, because you don't have anything to fall back on, right? You don't know this company. Sometimes people buy stocks that they don't even know what the hell the company is doing, yet alone how it makes money, whether they want to own it. They're just like, oh, this is hype, let's go buy it. So that's sort of, I feel, what you said, which is like, put it aside and do your research and then be ready for it, makes a lot of sense, because it gives you that like logical backup to justify whether if it's down, it's okay, it will go back up.
Right. Yeah. And that's how I do all of my investing, is that, you know, even if over, you know, the next year it goes down and it stays down for a whole year, I'm okay with it. I believe that in 5 to 10 or maybe 20 years, it's going to go way up in price, you know, and it's going to grow. And so that's okay with me, you know, so I'm actually okay with the red. I'm very high risk tolerant. So I know some people are not. And so there's certain stocks then that you should not invest in. If the stock goes up and down a lot, then you probably shouldn't invest in that kind of a stock. You should invest in one that's a little more stable, you know, because if you're going to get scared and you don't have that confidence, you know, that it's going to go back up, then don't do it. You know, you always ask yourself, like, if it goes down by 50% tomorrow, will you be mad at yourself or will you be okay with it?
That's good. That's a good question to ask yourself when you're actually pulling the trigger. Will I be mad if it goes down 50%? Cool. So let's talk about your portfolios. On a stock cards, a stock picks page, you have two portfolios listed. And obviously, stock guardians can go on the stock pick page and search for Wealthy Nurse Janee and see both portfolios. But would you give us a quick recap of these two portfolios and what is the difference between the two and why do you have two different portfolios?
So I have a lot of portfolios, right? So one is basically what I put into my health savings account. So I want that one to have pretty steady, you know, value, right? Because it's one I would use if an emergency happened and I needed money for health problems, right? So I don't necessarily want to put things in there that may go down for a long period of time. And I might need that, you know? So I put mostly dividend stocks there. So I'm looking for something that's safe, fairly safe, and that will then give me some income though. So I'm looking for a way to make money, but still keep it safe, right? So that's my HSA account. And then my other portfolio is for my retirement account. And most of the time I will hold those for a long term. I don't really look to sell those until I've made like a 70% return or something. Now, sometimes I will do a little bit of a swing trade. So I might sell within a few months. It just depends on how it goes. Like Upstart was one that went up, you know, the price increased a lot. So I went ahead and sold some, and then I bought it back again at a lower price to compound. So I may do that some with my IRA because I don't have to worry about the tax implications there. But those two portfolios are basically a combination of what I would do in my non-retirement account, my regular brokerage account. So I felt like putting both of those gave everybody a good overview of, hey, this is kind of the safer zone with dividends, and hey, this is kind of the higher risk zone. But I usually would hold those for over a year, and I'm looking to grow on the IRA one.
Love it. That makes sense. I do something similar. So I have this one main portfolio that I call Roll with Our CEO. That's basically everything I have, but they're not all same strategy. So there's the main portfolio, and then there's what I call satellite portfolios. So there's one that is beaten down. It's like purely when a stock that I really own or I want to own from my watch list, and it's beaten down a certain amount of percentage, then that's one. And I may sell this after it sort of has its run. And then I have another one that I call Windmill, and Windmill is it's really more short term. It's sort of more fun side of my investing as well. And so those are the ones that maybe I go very small, like one share or $1,000 only, like when I'm investing.
Right.
But it's more about like rapid and play and experiment. So that's the amount of money that I would, if to your point, if it goes down 50%, it's not gonna hurt me that much because there's not a lot of money in there. It's more about experimentation and learning and things like that. So I love that you have two different approaches, at least the ones that you're sharing with stock guardians here. So I have I want to get into one stock to buy and one stock to avoid, because I know everybody's super excited with those questions. But before we get there, I have one more question about your sort of investment strategy. This is one of the questions that a lot of stock guardians, and I know generally investors, especially early investors, ask. And that's about, what is your process or strategy to sell? There's a lot of conversations about when to buy and how to do research to buy. But when it comes to selling, it's a lot more difficult because of the combination of, well, I'm buy and hold, or, you know, all there's like different strategies to go about it. What is your approach to selling, and what are a few criteria that you go through when you decide whether it's time to sell something or not?
Most of the time, like I say, I'm not looking to sell until I've held it over a year. So I kind of check my portfolio maybe once a week, and I just see who's my biggest gainers. And if somebody's like at 70%, then I say, or they've jumped up a lot, you know, because I kind of remember where they are. So if they jump up a lot, I'll go and do a technical analysis on it, and I'll see, does it look like, you know, this is going to continue to go up, or do I think it's going to correct? And so some of the things that I'll use are like Bollinger Bands. I'll get too technical, but I use Ichimoku and Fibonacci. And so I'll see if it's oversold. If it's oversold, I'll usually sell about half of it. And then I'll plan when I want to buy it back, and I'll set buy limit orders and just go ahead and commit to that, you know. So I'm not usually selling to get rid of it forever. I'm usually just selling in order because it's oversold and I think that I'm going to take a profit, and then I'm going to buy it back so I can buy back more at a lower price. And the only other time I would sell something, if I'm just going to sell it to get rid of it, is because I no longer believe in it. Something's happened in the news, you know, they've changed leadership, or they've gone some different direction that's not why I invested with them, then I'll sell it, you know. So it's really about the fundamentals. And other than that, I'm just doing technical analysis to see, is the market up for some reason? So I'm going to go ahead and sell it because I think it's going to correct, and then I'll buy it back at a lower price.
I love that. It's quite straightforward. If you simplify it that way, it's either the reason you bought in it that doesn't apply or doesn't hold true anymore, or the second one is just to take some profit off the table when the market being sort of irrational or exuberant about a stock on its way up. I love it. That's a really, really good way of thinking about it. Well, now let's go to the good, exciting part, which I know everybody is interested, obviously, to hear. Let's just start from one stock to buy now and why.
Well, the stock that I believe in the most is Google right now. I mean, it's just a giant, and it has so much information on us for ads, for search purposes, and it's expanding. I have a Google phone. I use Google to search. I think, you know, next we're getting the Google earpods, like I'm looking for those. And so I just think that it's a global company that is going to continue to be strong in the future. So for now, that's my highest value stock.
I love it. And I agree. I mean, a lot of people say, well, how long these kind of giant companies can keep growing? Well, as long as everyone's life is entangled in what their business, they're going to keep growing, right? They may not do 3,000% in the next, like some AMC or like the sort of like meme stocks and stuff like that. But they're the one that protect your money. I remember, interestingly, you're probably familiar with Cathie Wood from ARK Invest, and she was saying she treats FANG stocks as cash holdings. So that's just how much she believes in these companies, meaning that if there is no other opportunity in the market or the market is doing crazy things, instead of holding in cash, the best way is to hold it in these sort of like big giant companies that our lives is just so dependent on them. And that just is a way to protect your investment, which is a very interesting way of thinking about it. I love that. That's a really good stock pick. Thank you for that, Janee. And then let's flip the coin to the other side and kind of hear your logic and your thought process about one stock to avoid now and why.
Well, you just said it. I was gonna say AMC. Yeah, I always tell my viewers, my followers, like, do not do meme stocks, do not do meme crypto. You're gonna get burned. Inevitably you get in too late and you get out too late, and there's gonna be some winners, but there's gonna be just as many losers in that situation. So I would just say avoid those altogether. Stick with your 20 that you believe in the next 10, 20 years. Unless you want to spend like YOLO $100, something that you're not going to be mad if you lose it. Yeah. But it's gambling. Yeah. So.
No, I love it. I mean, it's just, I don't know why it's so hard to accept that logic. And honestly, we've been having conversation with our portfolio publishers, fellow portfolio publishers in the past couple of months, and almost unanimously, everyone I spoke with just says, just accept that you can't just be, unless you get very lucky or something very serendipitous happens in your life, you can't really make significant amount of money on meme stocks, or you have to take significant amount of risk. So you could take a significant amount of risk and put a significant amount of money in meme stocks when they're down, and so that when you win, it's going to be significant, that is going to meaningfully impact your life. But the chances are that you get lucky and everything, all the stars align, is just not that high. So sort of the risk and reward aspects of this investment decision or trade or bet just doesn't justify. So it's a significant amount of money risk for a small probability of making a lot of money. And then that logic is so hard to accept.
Well, it's the same thing, people go out and buy lottery tickets all of the time, and they know that the likelihood that they're going to win is not very high, but at the same time, you accept that, you accept that the probability is not very high, right? But you would not go sell your car, I don't know, take a second mortgage out on your house and go buy all the lottery tickets, right? So don't do anything crazy with the AMC stocks or any of the other ones, right? Yeah. But if you want to put $10 on it and see if it goes up to 100 or something, hey, live life.
I know. Yeah. Just have some fun. And to be transparent, I have some AMC stocks that it's funny. I always say that, like, if you go to my portfolio and see the AMC row, I put a stupidity as my strategy reason to buy, because I knew the moment I was buying it, it's just this very small amount of money. But for me, it's more about, I want to be part of this craziness. It's sort of like having in it and just kind of like follow it, because I just find the phenomena is very interesting. This combination of individual investors, social media, all that sort of stuff. So I'm really just if you want to have some fun, but don't go sell your car or house.
Right.
Or I mean, even not even like that crazy, but even like significant portion of your portfolio, which should be sitting somewhere that is actually more reliable. That's not the right strategy.
Yeah. Cool. It's certainly not investing to do that.
Not investing. Yeah, it's fun, it's entertaining, it's betting, it's gambling, all that good stuff. And there's a place for all of that. It's just not investing, as we talked. Fantastic. Well, we're sort of getting to the end of the conversation, but I want to wrap it up with Janee so that you can get a chance to tell where Stock Guardians can find you And if they want to follow your work, just tell them about that. Obviously, we would put a link to your website and all your social media on your portfolios on the stock card so people can find you. But it's always good to hear it from you. And if you have any final basically advice or anything to share with the stock guardians, please go ahead.
Okay, well, like I said, I only have an hour every day. So mostly I'm on TikTok, and that's where I post most of my content. I am working on my YouTube, and at either one of those, I'm Wealthy Nurse Janee. And I'm also on Instagram in case I get kicked off of TikTok for talking about cryptocurrencies. But because some people did ask me that, they're like, oh, you're going to get kicked off of TikTok. Where's your Instagram? So I'm Wealthy Nurse Janee there too. But I'm most active on TikTok. So that's where you're going to find me most of the time. Yeah. And just to leave you with anything, I think most of your viewers are probably already investing. So you already know you can do it, right? I would just say pick things that you have strong conviction in over the long term. Don't get scared when you see red. Just see that as, hey, these things that I love are on sale and it's a great time to buy.
Yeah, perfect. That's just if you just everybody accept that one simple rule in investing, that's just going to be so much better for everyone's portfolios. I love it. I love how you simplify the crazy world of investing and everything to it's just this one fundamental rule that exists there. And if you just follow that, and you could just ignore everything else. And so is life, right? There's like so many distractions, but there's only a few philosophies that you could just follow and you'll be just fine after that.
Right. Yeah. Speaking on that, there's always news that with fear and, oh, there's going to be inflation. And then you're trying to figure out, what does inflation have to do with my account? And well, there's going to be, more COVIDs coming. And well, what's that going to do to my account? And do you believe in the companies? Mm-hmm. Are they going to stick around? Are they going to make it through COVID? You think they're going to make it through COVID? Then it's a great time to buy them. They're on sale, so yeah. Don't get too overwhelmed by a million things that are coming at you. Just, are they fundamentally good? Just buy them. That's okay. Long term, you're going to come out on top.
Perfect. I love it. And with that great rule for all of our fellow investors and fellow stock guardians, I want to thank you so much, Janee. I'm looking forward to hearing your updates on your portfolio, and hopefully we can get you back on this show whenever you feel you have time in your 1 hour per day. And we always love to have you back and get you chat with our fellow stock guardians. Thanks, Janee, for doing this call.
Thank you.